Hello guys, welcome back to ESENtaxa. Andrea Papito here. In this video we are going to talk about social security in United States and social security in Italy and how to pay the social security only in one of these two countries. Actually, the video will be focusing on how to skip paying the Italian social security and just continuing to pay the social security that you are paying in the United States if you are a United States citizen or if you are a green card holder, and then you are taxable on your worldwide income in the United States, even though you're a resident in Italy. So if you're new to this channel, ESENtaxa talks about how to optimize your taxation if you want to move into a specific country in Europe. We help people to understand tax-wise if the relocation makes sense or not. We provide you services such as tax consultancy, strategic plan for long term, and a tax simulation that allows you to understand with numbers, indeed, if this relocation that you have planified is actually the best in terms of taxation. In the description below the video you will have our contacts, calendar link to book one of our services, one of our consultations type, or our academy, the ESENtaxa Academy, in which we explain how to be eligible on impatriate regime in Italy, and also we explain how understand the international taxation concept. So we don't focus only on Italy but also international taxation in our academy, and we're moving to release more and more online courses over this subject. Now, going back to the topic of this video, in this video I want to tell you how to don't pay the Italian social security, because in Italy the social security it's a quite big burden. So it's 26% roughly for the consultant and 24-25% for entrepreneurs. Okay. So are there in place way to skip social security? The answer is yes, mostly reducing the social security with some technique strategies. So if you're interested to move to Italy, you don't want to pay social security because you just want to stay there for a few years. So you don't care about the Italian pension in the future, you want to find a way to skip paying social security. And this video is designed specially for, actually only for those who has the United States citizenship or green card holder, which means you are liable on tax on United States, because between Italy and United States there is a specific agreement, not just for tax to avoid double taxation, of course, but also specific agreement to avoid to pay the social security twice or just choose which country to pay the social security, which is extremely interesting. So stay up the end of this video, you will understand exactly how it works. I will be straight, easy, so you will understand very quickly how it works. So if you work in the United States, you have basically the possibility to ask to your Social Security institution in the United States the certification of coverage, okay? Certification of coverage. Right, if you have this certification of coverage, you can ask to the Italian National Social Security Institution, which is INPS. In Italian, the acronym is EINPS, to be exempt of paying the Italian Social Security. Okay. Now, in the United States, the Social Security is 12.5%. Up to 160,000, this is the mandatory one, dollars, while in Italy the Social Security is 26.07% on 190,000 euro. So it's capped at this number, at this moment. Now you're speaking right now in 2025, this is the, of course, those are the indexed number, they might change, they might grow in the future. So here's the situation. So if my income is lower than these two values, of course I need to evaluate if I want to skip paying the Social Security in country rather than the other one, because most likely I have in the United States a Social Security program which works well. It is investing my money into the stock market. The United States has a different system rather than the Italian one, so I want to keep paying my Social Security in the United States. But I have my interests and business in Italy, and I want to move to Italy. I want to run a business in Italy. I'm a freelancer, I'm a digital nomad. I want to run a bed and breakfast, a classical bed and breakfast business, but I need to have my a VAT number or position open in Italy to run my business, and Italy obliged me to pay the social security. So in certain scenarios, it's quite nice just to get rid of the Italian INPS and pay my 12.5% of social security in the United States. And then what you can do here, you can apply the forfait regime. So the forfait regime is the tax regime that allows you to, up to 85,000 euro, you have 5% flat tax of taxes to pay, okay? Only 5% flat tax. So 5% for the first 5 years. Okay, so let me write it here. So 5% for the first 5 years of activity, and then it becomes 15%. Okay, now what happens is that you don't pay 5% on 85,000, but you pay 5% after your business cost. But since here we are talking about the forfait regime, you have a forfeit cost given by default by the state based on your activity. Okay, so if your activity is a consultant, you have only 22% deduction cost given by default, which means that regardless if you have paid as expenses more or less, the states give you 22% deduction, okay? So you have 22% deduction on 85,000. Then you calculate 5,000 after the deduction, not on 85,000. And here you don't calculate the Italian social security because you have given the certification of coverage to INPS, but you keep paying the 12.5% to United States. And then you can also deduct your social security against your 85,000 euros. So you deduct your foreign social security. You first deduct the expenses, which are given by the state 22%. So you first deduct your 22% social security, the 22% expenses. Then what remains, you deduct this foreign social security that you have paid in the United States. And then basically what remains will be taxed at 5%, okay? Which is basically a very nice taxation. And then you might say, okay, but then when I pay taxes in Italy, because I'm tax resident in Italy, I will be liable on worldwide income, then I have to pay taxes also in the United States. How do I deal with that? So we just talked about social security, there is an agreement, I can skip it, I give the certification of coverage to INPS, okay, it's fine. And what about taxes? Well, you know that in the United States, if you're living abroad, you're entitled to obtain that foreign income exclusion, which is a threshold of 130,000 dollars. Yeah, I have to also say in dollars. So below this number, you don't have to pay any taxes in the United States. So you only have to worry to pay taxes in Italy. And this works, the tax regime, the forfeit regime works for 5 years, and the certification of coverage works also for 5 years. So it's perfectly in sync. So you can basically for 5 years live in Italy, pay taxes only in Italy, only this 5% after deduction after Social Security, pay only Social Security in the United States, and basically applying also the foreign income exclusion, you don't have to pay taxes in the United States again. And of course, the only things you have to do, report your income in the United States. This is something that you have to do anyway. Report your bank accounts abroad, your incomes abroad. Could be, okay, it's a work to be done, but it's definitely better than pay also any difference to United States in terms of taxes, okay? So this is a very nice, if your income is up to 85,000 euro per year, it's just a small business, you want to start up a business in Italy as a consultant or in another field, you can apply the forfeit regime in combination with certification of coverage. You can skip paying the Social Security in Italy, okay? So if you're interested in this kind of calculation, if you want to see your situation, to see in the net on your pocket, considering US taxes, Social Security in US, and forfeit regime in Italy, let us know in the description below the video. You will have the service called Tax Simulation, and we help you to understand if the relocation to Italy makes sense or not. And now, let me tell you that, let's imagine you earn more than 85,000 euro. You earn more, okay? 85,000, it's too small. You want to you're earning a lot of more money, but you still want to move to Italy. Is there any other tax regime that I can put in combination with my certification of coverage? The answer is yes, and it's called the impatriate regime. We have extensively talked about this regime in this channel, impatriate regime, where the threshold here is 600,000 euro under the condition of being eligible of the impatriate regime. And in the description below the video, in our ESENtaxa Academy, you have an online course which is called Impatriate Regime Eligibility Test. Thanks to this test, you will understand if you're eligible for this tax regime. And this tax regime gives you for 5 years, so again, it matches perfectly with the certification of coverage again. For 5 years, it gives you a deduction of 50% of your income. So while the impatriate regime was just a flat tax, 5% and that's it, here we have a 50% deduction after cost, after real expenses, because for the impatriate regime you don't have forfeit costs, but you deduct your real expenses. So you deduct your real expenses and the profit will be benefiting from a 50% deduction. So your income will be split by half. Half of it will go in your pocket tax-free, and the other half will be subject to the Italian ordinary tax bracket rates, which are from 23% up to 43%. Okay? And if you carry with you a minor for 5 years, you will have an increase of deduction up to 60%, which is a quite interesting one. So here the taxation could span between 19 and 22% based on the level of deduction, based on your family situation, but it's still a very nice solution. And also this impatriate regime, which is with this big deduction in Italy, can be put in combination with your certificate of coverage, and then you can get rid of your 26% Italian social security. Now, as we have seen, United States give you 12.5% percentage of social security up to 160,000. But Italy, it is true that asks you to pay more, 26%, but only up to 119,000, as we have seen in the board. So it's here, it's all matter of calculations, put down a table, evaluate your personal situation and see if impatriate regime makes sense with certification of coverage, or if the forfeit regime makes sense more with the certification of coverage. Okay? So I hope I was clear. I know that here we are intersecting like social security, taxes in Italy, and the convention to avoid the social security taxation in both countries. As you can see, international taxation matters are quite complex, but here in ESENtaxa we try to explain you in an easy manner what is in what we have on the table, and through this information you can understand if the relocation in Italy makes sense, especially if you have an Italian passport, for example, or you have any European passport. You can move there and you can try to set up a business. This is quite nice, especially if you have a single stream of income, which is a professional income that you run through this tax regime, because the other stream of incomes, such as rental income, passive income, these kind of things, they are not belongs to these tax regime programs. Okay, and this is also something that needs to be evaluated in consultancy along with the tax simulation. So you know exactly if the relocation in Italy tax-wise makes sense, so allows you to pay quite a lot of less money in comparison with the United States or in another country you're living in. Okay, I hope you find this information useful, and if you like this kind of content, notification bell and like the button to be always updated when we release this kind of content. See you in the next video. Bye.